My name's Elizabeth Herring, and I did the U.S. Treasury's market activity and interest rate forecast for the week of October 21st to October 25th, 2013. During the week, they had an overall negative change. The most notable change was on the Friday of the week. So I'll just go over the weekly snapshots of the different things that happened with the yield curve, and then what the expected future 1-year rate is. This was the weekly from Monday to Friday. I really didn't have that much change, so I just pulled the Monday and the Friday data. So as you can see, Friday it fell. It's also steepening from the Monday rates. It reflected a lower yield, and an investor would want to do a short term rather than the long term with the treasuries. They would expect to receive a higher gain for the longer period. This flattening occurs when the anticipation of a slower economic growth is going to be coming up, and they had a few of the different reasons why this happened. This is the interest rate forecast for the 1-year rate. As you can see, for Friday, it is higher than what it had been all week, so they do anticipate that the interest rate will rise over the next 10 years. Some of my key factors and events for the week on why did the interest rate change was that the reports were that the Treasury 10-year note yields touched the lowest level in the 12 weeks amid the speculation the partial U.S. government shutdown this month curbed the growth and would spur the Federal Reserve to keep buying bonds into next year. Overseas investors sold a net of $132 billion treasuries in the 4 months ended July. The debt ceiling debate has dissuaded foreign investors from putting their money into the U.S. government stock. The U.S. Treasury market is staying in a range while the yield curve continues to flatten because of growth concerns and inflation risk. The Fed continues to wait for employment levels to rise, and only after that will we see really a meaningful change with interest rates. The central bank, they're suggesting that the central bank should postpone tapering after the shutdown stopped the flow of economic reports. And while the Federal Reserve keeps suppressing the borrowing costs to buffer the economy, lingering doubts will likely cause bondholders to demand more to own the long-term treasuries relative to the short-term treasuries. Treasuries gained for a second consecutive week, even though the speculation in the U.S. economy is recovering too slowly for the Federal Reserve to begin reducing their asset purchases this year. Like I had said, they're waiting for employment levels to rise before they do that increase on the interest rates. And because of the shutdown, we did have a little less of a percentage point that was trimmed because of the loss of jobs and the economic growth kind of